Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, July 16th, 2020. It is almost 3. It's 2:54 p.m. Eastern Time as I'm starting the video, so we have about an hour to go in the market. And I wanted to do an update on gold. If you're listening to the video, you probably already saw the update. I closed out the gold official trade. We took that trade back here. We've had gold on and off, it was a mostly long trade ideas, throughout the bull market in gold since it bottomed back in late 2015. I think it was December of 2015. Miners bottomed right after that in early 2016. But that's where we grabbed it, right there on that pullback to support. Waited for that drop. We had that divergent high right here, which was a catalyst for the drop. You had negative divergence. Sometimes I use different boards. Sometimes these lines just seem to either vanish or I have them on another board and try to keep this clutter free. But that's it. So, even within a bull market, which gold is in, and this is a potential long-term trend line. So I'm doing this video for several reasons. Well, of course, analysis on the sector. But to update those, I know quite a few people out there have, at least some part of their portfolio, the long-term funds in gold. Maybe you're an active swing trader. So I'm doing this we're going to look at some potential short trade ideas in the sector, gold, silver, the mining stocks especially. I'll say this right now, and I say it often. The miners are simply effectively a leverage trade on gold. What does that mean? It's almost like trading gold futures, anything with leverage, or one of the leverage ETFs, because if gold goes up X, they tend to go up 2 times X or 1.8 times. There's no set formula, but during a bull trend they rise more, and during a bear trend they fall more. So if you get the call on gold right, you can trade gold or you can trade the miners, and usually, depending on market conditions, but usually outperform what the metal does. And on the flip side, so I'm going to lay out, what I think are increasing, an increasing case to either get short. We'll talk about that, the timing of it, whether it's today, in the next week or so here, and also for those that are bullish and long gold. I've been a gold. I'm not a gold bug. You guys, if you followed me for years, I was mostly shorting gold and the mining stocks on the way down, and even in between, hit and run, in and out. I have absolutely no allegiance to gold. In other words, I'm not a gold bug that no matter what it's doing. That's what the definition of a gold bug is. Bull or bear market, they're always making a case as to why you should buy gold. So just want to kind of set that straight. I'll just go by the charts. All right, so that's it. We got about a 21% gain from our entry right here on that pullback after that last divergent high, swung it up. And so my reasoning, as I said in there today, we caught this move. We quickly hit our first, second, and even third targets. We got, gold consolidated here for a while, and now we're up here. And my mindset was we're about 2% shy of that final target. I evaluate everything. I'm very analytical. I look at risk reward. Now, it doesn't mean that that's all it can go up and then it must fall. But it can continue up. And but to me, it's just not worth holding out for that. Whereas normally I might just raise stops. And I'll tell you what I did today. I had a lot of mining stocks, SIL and GDX, individual miners, gold, silver, for long-term accounts. And normally I would, tighten up stops. On the majority of those positions, it doesn't look good anymore. So I'm pulling that out now. And, if I need to re-enter at another point in time, hopefully it'll be on a pullback. If I miss out any more upside, so be it. Nobody ever went broke taking a profit. And what I'm concerned about is maybe a gap down. Now, I want to say this, and I'm kind of going all over the place here. Whether or not gold's going to continue up and hold this trend line. I showed you that it was cracking below that trend line today. And see, as I roll this, depends, this charting program, the trend line will move. This is it right there, nice and clean. That fits it best. When I say the best fit, here, okay, you have this major reaction low back here. That's where we bought it. We bought it right off the bounce of that support right about here. And that was also, the reason for that, it was a drop down to support. Nice correction within a bull market. Now, why I did that trend line like that, you have, I like to draw my trend lines with the most number of bodies and or shadows, the fat or skinny part. And so there I have 1, 2, 3, 4, 5, lots of reactions. To me, it's a valid trend line. And so we're starting to crack that today. Bigger picture is this. If you look at this right here, I probably did that wrong, box it in. You have this trading range. So gold, Here's my thing. I think on those ETFs and the individual stocks, you could gap down if the futures have a big move overnight. If you're trading GC gold futures or SI, you can control your stops if it starts to tank overnight. So I just didn't want to wake up to a big gap down. That would also put in an island top, right? Island cluster top. See that cluster of candles? So really zoom in tight, and I'll put a level there now. It's price support. It's just this recent trading range right here, and we're starting to crack the trend line. So to me, like I said, I've been expressed my concerns lately. I've been cautiously bullish for a while, and I've now flipped to getting ready to go bearish, or let's just say bearish, but it's not an all-in thing. Back to what I was saying earlier, it will depend. It may or may not depend on what the stock market does. You guys know my thoughts. I'm waiting to see a little more confirmation on the sell signals we had the other day, the bearish engulfing candles. They have not yet been confirmed. So on QQQ, we had what I call a potential topping stick. Some might call it a topping candle. It is, effectively. But in my book, you need to see that additional follow through to the downside. And we didn't have any red candles since. Even if we get a red candle today, we still need to take out this green candle that we had on Tuesday. So where I'm going with that is usually, but not always, if the stock market starts to correct, if we get a deeper correction, if we break that, I think we take another leg down. Usually that would be a tailwind, meaning bullish for gold, because gold gets that flight to safety bid. But there are times where gold and the stock market are trading together. They're both going up or they're both going down. And mainly these charts to me, and I'm flipping back to the gold daily, it's pretty darn clear. I mean, these divergences are unmistakable, and I've talked about it for months. I've been pointing them out for months, saying, look, in a bull market, divergences can be burned through, or sometimes what happens is you play out the correction plays out in more so in time with a sideways consolidation than in a correction in price. This was a correction in price, clearly straight down. This was a correction a little in both, but mostly in time right there, as was that one. And now, on the flip side, we did just break out of this trading range, and I did say that would be bullish. And we did. We had a nice lift from there. I'm talking this boxed-in trading range right here, that consolidation period we've been in. But we moved up already about 3-4%, not a whole lot. But again, I'm looking at this trend line, and I'm looking at that cracking right now. So let's move on. Look at a few other charts and targets. Oh yeah, I told you I'd share some targets. Well, top of the trading range, number one, that would be an ideal place. Then the bottom of the trading range, I don't see a lot of support between. If we enter the top, the bottom of that trading range is about 158, and so I'm doing this for either those that want to short gold for a pullback trade, or even a swing trade. This is big divergence. We could be looking at a multi-month trend change here, downtrend in gold. Or for those of you that are bullish, long term on gold, and looking for spots to either set objective stops, everything in reverse. If I'm showing you on gold or silver, any of these miners I'm about to get to, objective levels to short, if it breaks down, well, the same thing holds in reverse. If you're long any of those stocks or ETFs, those are objective levels to have a stop loss order a little bit below in case it breaks. If you want to tighten up stops, continue to ride the trend, because sometimes, again, you get these bearish developments that just don't materialize, just like sometimes you get bullish developments that never, materialize. All right, so that's it. I do favor at this point in time, I've shifted enough that I'm going to probably today start scaling in. I wanted to get this out to you, the post on GLD, and then I'm going to do the video, and I may start taking some positions today because I'm looking at that candle. It looks like a little more downside, and we're going to get there. So let's go over some trade ideas. Beyond that, beyond 158, again, it's a pretty big divergent high. You look at the weekly chart, by the way, this divergence has been building all the way out here on the weekly time frame as well. I know it doesn't mesh with my outlook for where the stock market's going, and that's, to me, the beauty of diversifying. I may be wrong on the market, or I may be wrong on gold, but if I trade both, let's say I start going short gold here in the miners soon, and they pan out, but the market, which I've taken some short positions on, continues to go up. then I'm going to be, wrong on those. I'm going to lose some money on those positions, and I'm still, like I said, on the equity shorts, still kind of taking it light. We need some more evidence right now. The market hasn't confirmed any of the recent sell signals. It has on some of the individual stocks. I'm much more comfortable with the Adobe short, the PayPal short, because as I talked about, market breadth has been deteriorating. So I'm okay with the best looking individual stocks. As far as QQQ, SPY, those kind of things, you need a little more room, a little more downside, a little more confirmation of the sell signal. So, all right, that's it. There's your big divergent high. This is where that fourth and final target was set, and I've had this as a long-term target all the way back here, really from, I can't remember if I put it on here when gold bottomed, but there's that bottom I talked about in 2015, the end of the last bear market right here, and the start of a bull market. Started off a little slow, but really not much slower than the bear market ended. This was a final stretch in the bear market, then the early stage of the bull market, and then we really started to move. And so what I'm looking at, there were three major reaction highs here after that blow off top in gold in the last bull market in 2011. 1, 2, 3, check, 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 all around that 174 level. So that's what I was targeting. And the way it works, if so many eyes are looking at 174 as well, one of two things is likely to happen. Gold's either going to reverse just shy and deny an objective exit to all those holding out for that target, or it may blow on through there. And you get a lot of people that may short it there and burn them. All right, so now let's look at levels, entry points, and things like that. And let's look at gold futures before we move on to the ETFs. Okay, remember the trading range on gold, I had it, gold breaking out of, and GC as well. This is GC gold futures. That's the, roughly the trading range. We had a little whipsaw below there, and that was a catalyst for this move up. But here's what's going on now. It's been a little bit sloppy here, this trend line. I had to revise it once. But I think it fits pretty well, and we did have a breakdown recently, a back test, and we're back down. So what happened here is we broke out. To me, that was a big breakout, 170, 1791, right? Roughly the top of that level, and it even goes to the left of the chart. It was a multi-month trading range. So you broke out, right? You back tested, and you back test again. A healthy breakout, especially after such a multi-month trading range, I would have expected gold to have more zest, more oomph right now. So the fact that it's been really unable to power on up even after back testing a couple times makes me think the back test is going to fail, along with the divergence that it had in place. And now it hasn't failed yet. So here's what I'm getting at. The uptrend line on the daily chart of GLD I just showed you is starting to crack. It's not a very impulsive candle. It's not a big red candle. We haven't closed the day yet. It's still an hour to go. But if we go much lower, you're going to have fallen back into this trading range on GC, back below, we'll call it 1790 on the downside if you want to be safe. 17, I had it almost 1791, but let's just say 1790. Fall back into the trading range. Well, obviously that's not going to be a bullish event, if anything bearish. And you'll also have clearly taken out that uptrend line on GLD there. So that's what would be an objective short entry, or a place to have stops if you're long GLD or GC. Stops. Let's try to measure it out for you. Let's just say another, not much, another % or so below should do the trick. Obviously, the more you drop, the more likely that any sell signal is to stick. So you maybe 2%, but I think another 1% or so, if it happens today or tomorrow. Again, it's all when it happens, because if GLD snaps back up above the trend line today, it's going to change things. But from where we're at right now, I put that line there again, that recent trading range, 1% below this, about 168.70, 1% below that number will have clearly taken out the trend line on gold there. And remember, it's I had it drawn a couple different ways. It's the trend line really off this March 16th low. Okay, so enough on that. Let's look at the other metals. Let's look at silver, SLV. And let's see if I have another trend line here, which I do. I could draw a few. Let me look at one other board here. 1 second. Yeah, on this one you can see, you can also take a trend line off the lows. It doesn't have as many reactions as gold, but it has quite a few right here. And the same thing you have with gold, you have pretty clear negative divergence on this daily time frame. And other than that, you also have, I'm going to add one more line right here. We had this major reaction high right here back in August of 2019. It looks like late August, I think. And that's about where we're at now. That's a major reaction high there in silver. Also getting close to that those 2016 highs. So that's it. And so sell signal, well, I think a break back down below that trend line as well as that 1767 level. Look at this board as well. There's an uptrend line. It's a little more steep. I don't like that fit. I'm going to pull it here. I think that's the same trend line I just had on the other one. This is just your divergence line right here. I know I have a lot of lines on the chart. And you have to respect these divergences in the metals, even within a bull market. And silver's been kind of choppy and it can move. So I guess the takeaway from here is don't underestimate how much silver can fall. Yes, a lot of that swift drop there was due to the meltdown during the coronavirus scare, but let me tell you, we're not immune from those. Just because we had one a few months ago doesn't mean, in fact, if anything, I think the risk for a big drop in the market is even much higher now. I think the Fed poured a lot of fuel on the fire here. That just, it just needs that proper spark to get things going. In other words, I think they've taken valuations, created added fuel to a bubble that was pretty much in place for years. And so just keep that in mind. And the only takeaway is, don't think that silver can't drop again 38% in a matter of a couple months there like it did last time. Yeah, I jump back to the weekly chart. I can still make a longer term bullish case. I'm just at this point in time, like I'm showing you on the weekly, it's these divergences and some other things that are giving me pause here. There's your divergent high right there. And what I'm talking about, it looks like a multi-year basing pattern right here in silver. We had that little washout move with the the forced liquidation during the first coronavirus dump, and we had a sharp recovery. So if nothing else, we're also quite overbought right here on the weekly chart. And again, we have the divergences right now in place. So longer term, look, if something happens nothing in the next few days here, even week or two, is going to change my outlook. But 3-4 weeks out, a couple months from now, who knows? Maybe we break out, maybe we burn through the divergences. But before that happens, I think at the very least, we're probably going to look for a tradable correction here. So I'm going to start giving you some levels on what to target. I'm looking at silver. I'm going to give you one line right here, and I'll tell you right now just two near-term targets, 1714, 1733. Of course, again, a break of the trend line there should do the trick. There's a recent cluster of candles. If you want a horizontal price level, I would say right about here. You have that gap, and you also have the potential, should we gap down tomorrow in gold and silver, like I said, for an island cluster top. These candles would be your island. There's a gap on this side. If you get a gap on this side, it would take out the trend line as well as the island top. And this is SI, Silver Futures, 60-minute chart. You had a little minor trend line here that's starting to give way. You've been building divergences from this point to here. You can see the negative divergences building. And that is telling me most likely we're coming back at minimum. And I think I covered this the other day. It's a simple, clean target. I like it because it's dual support, uptrend line and price support. That number is about 18. Well, it's exactly at 1887.8 on silver futures. So that would be a first target. Probably get a reaction, a bounce there for an active trader. It'd be about a 3% drop from where we're at. And not bad if if you trade silver futures, that's going to put a few pennies in your pocket there if you get a 3% pullback. And then again, if we break that, obviously that would be solid break below there would open the door for an even bigger drop. So I think it would play out something like this at that level, get a reaction, and probably then go ahead and break down, because if we get that, it's probably going to entail a solid breakdown on those trend lines I just showed you on the daily charts of GLD and SLV, and that's why I'm leaning towards this ultimately instead of this right here. And now on to the miners. All right, so this is GDX, undoubtedly the most popular trading vehicle for mining stocks. There's some others. We'll look at silver miners, and there's the junior miners, GDXJ, all those. But let's just look at this. These are your big senior miners, and you have it's very similar to gold. A nice clean up trend line off the lows. Lots of reactions lately, and it started to crack the other day. Broke down, back test, and that's it. So basically, GDX is on a sell signal. But I always say this. The miners aren't going anywhere without gold. You're not going to see the miners drop and come down here and fall 10, 20, 15% or more with gold continuing to rise. So what happens is it looks like they've started to break down, but they're not going anywhere. They're holding up, waiting for that confirming sell signal on gold. So if you do see gold drop 5-10% from where we're at, you'll probably see the miners drop a lot more than that. Targets, I haven't spent too much time because I wanted to get this video out really once I made that decision to close out the GLD trade. But I'd say here's a support zone right there, these two targets. I'll be looking at again, if we get those sell signals, a pretty decent swing trade, and that would be a level of, let me see where that line, now I'm going to take this line off real quick so I can give you some measurements right here, projections. About 32.90, we'll call it 33. You might want to cover a little bit above the actual support level. That'd be about a 13, almost actually closer, right at 14% drop. 31.33, 18% drop. Let's look at that now. We'll see if and when we even get the sell signals on the metals, and if we do, then depending on how things are looking, we'll see if I would extend those targets. So right now, that just gives you a target range. Dust and Nugget have always been crowd favorites for those that trade the metals. Dust is it used to be the 3 times short gold mining stock, for the gold miners, and then Nugget was a 3-time long. During that whole meltdown, they changed it. I told you a lot of 3-time leverage ETFs, they just broke. Some went away. This one broke to a point where they were able to salvage it, keep things going, but they realized that their model with the market is prone to these sudden surges in volatility in recent years, and the whole financial engineering, the way they make these things work, with derivatives and all that, they figured they could keep it going, cutting that leverage down to 2 times. I just want to point that out for those of you that trade it for years. You're probably already aware of it, but that's the difference. And it's kind of sad because anybody in Dust or even Nugget, like if you wrote out the drop in Nugget, that's why you don't hold these things as long-term trading vehicles. If you wrote out the drop in Nugget right there, from talking into the March lows, you only made back about half your money because they changed the game. They changed the rules on you somewhere in here. Whereas if you had just GDX, which is non-leveraged, the miners itself, here's the drop back from the February highs into the March lows right there. And we're way above it in GDX. So what that was, it's a function of the math, the wicked math that worked against those holding Nugget as a long-term position. You were going 300% on the downside, but when things turned around and the miners were rocketing up, they cut your leverage down to 200%. So there's really, anyways, that's kind of a sad thing. But I would just want to point that out. If you can't short an account for whatever reason, IRA or a non-margin account, cash account, you can always go long Dust. And that's the big divergent low right there. And as far as entries go, it take forever to go through each and every security on each time frame. But you can see all the trend lines are roughly going to match. The metals, the miners. You want to see, again, the metals break down. Gold and silver, primarily gold. That's just a 60-minute chart. I want to give you some targets for your active traders. Let's look at Dust. If you're going to trade Dust, probably should have had this marked up in advance. Say there was a trend line there. Remember the GDX had broken out, and that's what we could see here on that trend line. We broke out, but it's waiting. Dust is waiting for gold to kind of show its hand, whether it's going to break down or not. I would say a maximum upside range, it's just 60-minute chart, is right around here, that 35 level. You can see this recent trading range, and I think that's a very doable target there. So first would be the bottom of the trading range at 25, and then the top around 35. And so same thing in reverse. You're talking 2-time leverage, so about 10, a little better than 10% if it gets up there. And if we get a pretty healthy correction, you're talking about 54% all the way up to about 35, depending on if and how it gets there. I talk about that on the FAQ page. There's a question about leverage ETFs and decay. I've always said this, these guys can do better than when they were 3-time leverage. If you're in dust at the right moment or nugget, you can actually do much better than 300% return on your money because of the way the math works. What you don't want to be in dust or nugget is a long-term hold, multi-month trade when they're going sideways. This is when you get decay. This is when you don't. Well, if you're obviously let's say you were a nugget then and was dropping straight down. That's when you want to be, in this case, short dust or long nugget, and this is what you want to try to sidestep, these consolidation ranges. Okay, this is a daily chart of GDXJ. That's the Junior Gold Miners ETF. Same story, you have the negative divergence, almost slightly, about equal highs there on the RSI, maybe ever so slightly higher high, but for all intents and purposes, same thing, roughly equal highs with higher highs and prices, lower highs clearly on the PPO right there. So there's your negative divergence, just like the GDX and GLD have. There's your trend line. So this one hasn't broken trend yet. If it does, that would be the first target there, swing target 43.26 on the juniors. That would be a drop of about 18%. Pretty big trading range. I would expect the buyers to step in there. I could tell you that's what I call a high I'd give it a very good chance that you're going to get a reaction on that level, meaning a bounce or a consolidation, probably a little of both. And then ultimately, if things get ugly, maybe down here. So let's just say at this point in time, that's my pullback target. I think if we get a sell signal, please remember there's an enormous difference between a trade setup, something that we're watching, and an actionable trade. If the miners continue to go up, if gold continues to go up, we may ride this trend line for a while. Maybe the divergences extends, maybe gold hits that final target that I had that's a couple percentage points higher, and then we break down. Or maybe we keep going up and these divergences get burned through. So right now, this one, we have not triggered a sell signal. GDXJ is clearly in an uptrend with absolutely zero sell signals, nothing that I see. I see a little area of consolidation here. So ideally, you want to see that break to the downside of that consolidation area, which will also have taken it under the trend line. All right, and I give you a target there. And then you have SIL, Silver Miners ETF. Beautiful little bearish rising wedge pattern here. Let me roll back. You can see the lines already drawn. There's your divergence line right there. There's your uptrend line right there. And again, hasn't broken yet. If it does break, some of these are old levels here. I'm going to borrow this line, put it up here. That would certainly be my first. I won't call it a first target. It's too close. This is what I would call R1, resistance 1, or really R2. Resistance 1, first resistance level is this uptrend line. Then you have to take out that 37.67 level because it's in very close proximity. You also have a cluster of recent candles kind of traded around. So that will, I think, seal the deal on a breakdown. Anything much below 37.67, especially a daily close below it. First and minimum target 33.82, and then you can see some potential targets there. Let's just say right now these would be my two targets, minimum target and at this point in time maximum target. There's a whole lot of supply here, meaning support up above that 31.82, 32ish level. So we're looking for what I think at minimum, if we get the sell signals, be a drop of about 14% in SIL. And then same thing, you have SILJ, the junior miner silver, same thing. You can draw these trend lines. We had this one, it was an official trade idea back here. We hit our third target. Entry would have probably been on this breakout right here. T1 hit, T2, T3, and then it fell. So we had a nice exit on that one. And this is it. We have this trend line right now. You have the negative divergence right there. Negative divergence. Just like you had right here. That's what was the catalyst. You can see my divergence lines. That right after our third target was hit, it went up just a little bit more. And then we were able to sidestep a give back of 62%. That's how much these juniors dropped. So you're looking at a nice clean bearish rising wedge. And finally, let's just rifle through some of the big miners, take a look at those. Here's a watch list of related items. I don't know why TC2000 is putting K, which is Kellogg's, in all the gold lists, all the various gold GDX holdings and others. I don't know what's going on there unless Kellogg's started to mine for gold recently. All right, let's look at a few. Newmont, one of the biggest ones in the game here, already put in a divergent high back here. Had a pretty big correction, and I think this is a valid trend line. There are a lot of things where you had this almost as if it didn't happen, that big drop down, meltdown in the March lows, and a lot of stocks recovered those trend lines. So I'm watching that one. We don't have a divergent high, and we don't have it on all the miners. So I'm not at this point. I'm not screamingly bearish. It would look a lot better if all the big miners had divergent highs as well. But you don't have to have divergent highs. And remember, you can also look at it this way. This was a divergent high. This was a drop, and this is a kickback rally. That was maybe the first leg down in a multi-wave correction. Now we already hit this target once at 52.43. However, it would be the next target again on the downside. Maybe we hit it again. Just wanted to say there's Newmont, not one of my favorites to short. Let me just say that. It's giving me a couple other. Yeah, the watch list is populating with these companies that are not in the mining GDX and the gold mining ETF. But AEM is. And this kind of fits the scenario for a little more upside on gold. And if we get that, maybe the miners have one more leg up in them before we get a solid sell signal, something like that. If we got that, it would give us this negative divergence right here. As of now, we need to make an equal or higher high over this one, and we haven't done that yet. And we also need to take out the trend line. Pretty big support here. Support zone down to about 63, 66, up to about 65 right here. You can see numerous reactions at that level. And I think if we can't hold it and we break down, this one will probably go. Let me give you one more level. There was actually a lot of trading around there, and there. So I would say that would be your target there, about 57.70 or so. Royal Gold, RGLD, again, another one doesn't have divergence, and if it continues up, so I may be doing a follow-up video to these miners, a few weeks or a few months from now. Big level so far looks to be about right here. Let me put the number up. It would be 138.86. Why is that? You have a couple major reaction highs right there. This one and this one. Both of those, by the way, were divergent highs. You can see that. So divergent high at resistance, those are your best shorting ops. And so maybe the miners, maybe they have corrected what they needed to. So that's why I do this. That's why I drill down to not only just gold and GDX, but I like to drill down to the individual components. Because as I often say, a sector or an index is simply the sum of its parts. So I'm looking at this. Break of that level would probably bring us down here to that 113 level again. And again, not one of the most bearish charts out there. This one looks poised to fall more. This is PAAS. This is one of the silver stocks. Have this trend line here that we broke back there, and with a divergent high, and that led to that big drop into the March lows. That was a drop of about 60%. These silver stocks can really run, and if I extend that trend line out, it continues here. This is my divergence line. This is showing the negative divergence in place that we have now, just like back here. This is also a very steep and overextended wedge, so this one I can tell you is one of my favorites. Sell signal would come on a break of the trend line. It's right there. And if I don't have an alert set already, I'm going to do that right now. I'm just going to tighten this up just a bit here. Yeah, I'll go ahead and set an alert to tell me if that breaks. Targets, pretty steep wedge. There's definitely a little support right about here. That's actually the seal the deal number. In other words, we break the trend line, you still have this cluster of candles, and there is the potential. Again, if we gap down tomorrow, next Friday, or Friday is tomorrow, next week, anytime soon, you have the potential for an island cluster top. But what I'm getting at, you need to take out this trend line, and then you also need to take out 30.41 at least for an all clear short, because that is pretty decent support. And if that happens, target would be about right here. I'm looking at reaction high from back here, and then a lot of reactions on or around this level here recently. So 26.05, that would be a drop of about 20%, 21% from where we're at right now. AU, almost identical. Let me put a level there for you. 2787. That's enough to make that the first target. Problem is, and this trend line's not super well defined. I'm going to tighten that up. I think that's probably your better fit on the trend line. So there's first target, and I can just tell you right here, second target, undoubtedly. That would be a preferred swing target, meaning if we got there, I would put a very, very good odds that we're going to get a reaction. So I think this one will play out something like this if we get the sell signal I'm looking for in the entire sector, in the metals and the miners. So that would be how I would trade that one. May or may not even gain the reaction off the first level, because I think that's a pretty much a high probability target based on the scope of this pattern right now. And that's a drop of about 25%. BVN, another small miner, working its way up this uptrend line. It's been lagging behind the rest of the sector, so relative weakness there. BTG, nice clean up trend line. Like so many, you have support just below. So like I said, there's work to be done. Even if we have get those trend line breaks, then it maybe a half position. Don't get too aggressive. Wait till this 570 level goes, and collectively on all these, not just this one, because what happens, BTG could prop below 570, and then GLD or SLV or SIL or most of the other big miners all hit and then bounce off their support levels. Well, what's going to happen is just like when Facebook broke down a couple weeks ago, but Microsoft, Amazon, Apple, they were all still going up. They didn't break down. That breakdown in Facebook proved to be a false breakdown, a whipsaw signal, because money was continuing to flow into the FANGs in QQQ, and so it lifted up Facebook, and the same thing would happen here. So the more of these you see break down, one way to do it, if you have a lot of unlimited alerts, just set alerts across the board, and when they start going off like popcorn one day, one after another, the sector's breaking down. And the one thing I'll say is can't be too late to the party. These things move quick. Traded them for years. When the momentum traders decide that the trend has now shifted, they go from buy to sell in pretty short order. So if you wait just a few days, you might already be halfway down or more to this target, and that's also about a 15% drop right there. GFI, at this point, it's just getting repetitive, so I'm not going to go through them all. Trend lines are right there. There's your sell signal on a break of the trend line. Let me tighten it up. That's right up on it, and that would be a drop of, let me move that line from where we're at now. It'd be a drop of about 22.5%. So there it is. So most of these, what I'm seeing is at least PPO divergent. A lot of them don't have RSI divergence. So it's possible we get another leg and maybe extend this divergence later on in a couple weeks or a couple months and then get RSI divergence. Or sometimes you don't need that. I guess you actually did have it there ever so slightly at equal highs on that before that big drop. But like I said, it certainly helps to have divergence across the board, but it is not an absolute requirement. And then again, at the end of the day, the bottom line, I'll say this once more, it is, to me, maybe we're clearly in an uptrend, make no mistake about it. So shorting the metals or the miners are counter trend trades. There may be more upside, but the risk reward to me is quickly shifting towards the downside, especially if we get those sell signals that I talked about. And if we don't, again, I'll revisit these, whether it's weeks or months from now, when I think the time is right. I'm going to wrap it up here and get this video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.